welcome to Trader Merlin Show for your Tuesday edition. Taco Tuesday, Trivia Tuesday, whatever you want to call it. It should be a fun day for us here today because I will dive into some viewer questions. Actually, one in particular, which I think was a very good question. And my hope is that this, I think, young trader will be here with us today. So tomorrow, as I mentioned, I'm not going to do a show Wednesday, Thursday, or Friday. I will try to squeeze in one later in the week, but keep your eye on my Twitter feed, which is going to be at TraderMerlin. I'll let you know there. I might try to just do a surprise feed if I can get a minute away from the recording schedule because I miss doing these shows. So again, no show Wednesday, Thursday, Friday, but there is a slight chance that we'll get something in the tail end of the week if I can pull it off and get away. So greetings, everybody. Lori's in Orlando. Joe up there in sunny Yakima County. I love Yakima. Every time you say that, I'm always like, I love Yakima. I wish fish would go back to the gorge. All right, so today's show is driven from a viewer question, and it's this one here. Adam D., who is, I think, relatively new to the program, he asked some pretty good questions. They were basic, but they were good questions for someone just kind of struggling through it and trying to figure out their way as a trader. He says, I'm an OTA student and have been trading live for about a year and a half and haven't reached consistent profitability. I believe in the process, but my parents doubt trading. How can I show them that there are day traders that can make a living at trading? That's from Adam D. So before I dive into my perspective on this and take on this, I thought I would kind of try to do an all-encompassing show on kind of tips and keys to being a consistent trader. So for our 898th show, I asked AI to show me a nice pathway leading up into the hills. Of course, at the end of that, there's a nice big dollar sign. And the topic, how to be a consistent trader. Now, before I go down the path, I do want to make some things pretty clear for Adam and many others. There is a ton of evidence that shows that the average trader loses money. And I don't think that is bad evidence at all. I think that's actually factual. And just judging by what I've seen over the years, the vast majority of people lose money and they do it consistently. Now, of course, you're probably starting off going, hold on a second. Well, this doesn't sound very positive and appealing. There's a reason for it. And in my opinion, it's a very simple reason and it's easy to fix. But most people get into this and become a quote unquote trader because they think they're going to make a lot of money really quick. They're going to think it's very easy to do because all these ads and headlines and some expert on social media told you they made $5 million last month on one trade, you know. BS. It's difficult. And most of you in here are active, right? You're trading on a regular basis and you know it's difficult. There's a certain challenge that we face every single day as traders. And the key for it all is how well we deal with normal days and completely adverse days where things look completely out of normal and you're like, what on earth is happening? You know, how do we navigate that storm? It's kind of like a sailor on a boat, right? The captain is used to nice blue skies and, you know, gentle breeze to sail that boat. But what do you do when a tempest hits and all of a sudden you got to reevaluate and control everything as best you can? That to me is where trading separates the professionals from the amateurs. And the statistics show that 93% of people fail at trading. It's an alarming statistic, but I think if you do the research, I do believe that starting your own business also has an extremely high failure rate. I'm going to just real quickly, I wish I could just say it and have the computer do it for me, but how many businesses fail in the first 5 years? It's like 90-something%. Oh, wow. So this is according to the Bureau of Labor Statistics. It isn't necessarily true. Data from the Bureau of Labor Statistics shows that 20% of new businesses fail in the first 2 years, 45% during the first 5 years, and 65% in the first 10 years. Okay, I actually thought it was a lot worse than that. Either way, there's challenges there that we face. So I think you've got to go into it knowing that it's difficult, that every day is going to be a different process. You know, if you're an accountant, the numbers come in and you just deal with them as they come, and this leads to this, and that's an easy answer. For us, it's a much more of a creative process, I think. In many cases, I feel like we're an artist because we're taking in different elements and trying to create the same picture every day, which is a winning trade. So, Adam, that's probably the first piece. The other piece that's a challenge for you is you've got naysayers around you. You got people who are like, oh, I don't know, you're not going to do it, you're not going to make it, you're going to be a failure, you're not going to succeed. You either need to tell your parents to shut up or to support you. right? And then if they're going to continue to badmouth trading, then don't talk about trading with them. Surround yourself by people who are doing this and are putting in the same amount of effort that you are. One reason I love teaching at OTA is I'm surrounded by other professional traders, but I'm also surrounded by many students who are willing to put in the effort, who are willing to put in the time. You know, I can be very condescending and rude sometimes, and the people that I just love to lambaste and just tell them that they suck are the people that don't want to do any work. I literally had a person in my class who said, where's the button that just tells me what to buy and when to buy it? I don't really want to do anything. I'm like, you're going to lose. And I hope that you lose, because you can't go into it thinking that something is so simple and easy. Okay, let's go back and run through my idea of, if you want to be consistent, Adam, what do you have to do? Well, it's really simple. Step number one is you have to really figure out what exactly you want out of it. And I want you to forget about money. We know that that's always the result, right? It's always the result is, I want money, I want money, I want money. Don't think about that. Like, what the overall goal is to make money, but what would make you happy as a trader? I think a lot of people would be extremely happy making $500 a day, right? You make some pretty decent number with that. But what number makes you happy? And I think you have to be realistic in your numbers. I've also had students that come into my class, and at the very beginning of my classes, one of my favorite things to do is to go around the room and ask people 3 questions. What's your name? What do you do for work? What are your goals out of this course? And it's always enlightening to see what people do, their backgrounds, and I make notes because I think that certain professions have, in my opinion, a propensity to success as a trader because of there's discipline, structure, and routine already in place there. Forgot where I was going with that. Oh yeah, I've had people, one guy says, I want to make $1 million by the end of the year. And I said, okay, well, how big is your account size that you're starting with? And he says $10,000. And I just started laughing. I couldn't help it, because you think you're going to take 10 grand and turn it into $1 million in a year? You're in the wrong business, man. Just go buy a lotto ticket. It's easier, less stress. You know, you look at the historical average returns of the market, and you got to be reasonable with what your expectations are. So number one for me, and this is a really easy number one, is develop a trading plan. I did a presentation for the Money Show, fun organization. They put all kinds of events on around the world where you can go meet a bunch of different industry professionals and see either what they're selling, their education, just learn a lot. I did a program for them many years back called How to Be a Part of the 7% of Traders Who Succeed. And in that, it was, you got to start with a plan. And most people don't have a plan for trading other than to make money. And that will not do it, right? If I have a goal as a coach for a football team and I say, our goal is to win, that's my plan. Yeah, there we go, let's win. You know it's going to fail, right? The way that I increase my probability of achieving my goal of making money is when I have that plan. Not only do I have to have the plan for all the members on my team, all the strategic components of my team, but also how they're going to interact with the opposing team. And when I make a trade, you guys have seen a lot of comments that I make on price charts and different layouts and setups and patterns and things like that. That's what I'm doing to evaluate my team and saying, okay, what are my odds going against that team? Meaning I'm putting on this trade. Where are my strong suits? Where are my weaknesses? What's the probability of everything that I do? And that's a result of 27 years of market analysis. So when I say develop a trading plan, I put different components in this one. Number one is going to be know what you're trading. If you're brand new and some guy's like, man, I am killing it on cocoa futures right now, don't go buy cocoa futures. Unless you study that thing, you got to know the trading hours, all the different little idiosyncrasies of each asset class, I think are really important for you to know. Anybody trying to jump into the futures market, great, futures are a fantastic trading vehicle, but you better know how futures markets work, particularly the ones that you're in. You're trading stocks, great. You still need to know the market, its behavior. What are the rules? Things, we did a show the other day on float versus outstanding shares. That's something that you should know as a trader, but I'm willing to bet you. I'll bet everybody here, if you go home and ask them, what's the float? And pick any stock that they say they know. Just go, what stock do you know well? They're like, oh, I know Apple really well. Say, what's the float? And I go, I don't know what you're talking about. Because people don't ever think of that stuff. They don't look at that information. But for me, that's part of the playing field. That's the opposing team. I kind of need to know that because shares outstanding gives me an idea of liquidity. how volatile something may be, which is one little metric of risk management. Next piece. I got risk management on there. Yes, keep typing in questions. If you guys have stuff that's just for me, like direct questions you want me to answer, just type a couple question marks before, because I see you got a whole bunch of stuff coming through already, and I do want to answer those, but I'm on a roll right now on my steps to consistency. Number 2 is risk management. Now, you notice I haven't said, here's how much I want to make. I am a firm believer that you should just forget about what it is that you're trying to make. I know it sounds really weird, but my results were dramatically different when I focused on just losing money. If I focused on making the money, what I found was I'd often open myself up to bigger losses, and therefore my consistency factor was horrible. If I can focus on losing X amount or X percentage, I know some people use a 1%, some people use a 3% strategy. I don't care what your stop loss strategy is, but you've got to have one. Now, as we've seen with certain stocks, it could fall 50, 60, 70, 80, 90, 100%. And if you don't have risk management, you just lost everything. So I don't care what the strategy is, but you have to have a number where you say, this is enough. Lori said, never knew about float until you talked about it. And it's one of those weird little things, right? It's not the piece that makes your trade by any means. But man, when we look at the float versus outstanding shares for VinFast versus like an Apple, I mean, you felt like Macaulay Culkin, like, wow, how could that possibly be? Or same with ARM. Before that lockup, ARM had like 90% of its shares were locked up. That's crazy, insane. So yeah, this stuff is important. All right, I'm on fire. I'm feeling it today. So with that risk management thing, I don't care what number it is that you're risking, but you have to have a number. So I'll give you an example when things really started to turn around for me back in the late 90s. I didn't have a stop loss, and then I implemented a thing where it was just $500 per day. So I knew that for me, and again, I'm saying this personally, you all have to find out what your number is, but you all have a number where you change psychologically as a human being. So for example, if I lose $500, I mean, look, I'm not sitting here going, yay, I lost $500, but I am going, okay, I took my shots, I took my chances, I measured my probability before that trade was made. So I kind of thought, okay, I'm going to risk 500, but I'm trying to make 1,500 or 2,000, something like that. And it didn't work out. Okay, fine, done for the day, move on, come back and try again tomorrow. It just didn't work today. I don't change as a person if I lose $500. No big deal. Now, I've had days where I lose $10,000. I can tell you, I'm a complete a-hole. I'm a bad person to be around. I don't want to talk to you. I'm rude. I'm going to cut you off. You're going to be like, man, this guy's a jerk. Yeah, because I'm damaged. I am messed up. And people here have done that. And I'm sure I got many people in here have been through that, where you lost a huge amount of money and you feel embarrassed. I don't know. You feel ashamed. You feel sick to your stomach. To get back on track to consistency after you sustain a loss that's that dramatic could take a long time, months, if not years. So personally, have a number. If it's $100 and you go, that's all I can lose without changing, then keep it there, right? That's it. Yeah. Ricardo says, Larry says, always find your puke point. Yeah, that's it. I prefer not to go to the puke point. I prefer to go to the spins point. I don't want to get to the puke point. That's bad. But I think everybody has to have that number. We're all going to be different. I probably have I've been much more desensitized to big trades personally, because of just the amount of trades I've been in over the years, and some of my trades have been massive. You know, I've had some nice 6-figure losses, and you just go, okay, fine, move on. I'm sure for most people, incurring a 6-figure loss would be the end of your trading career and psychologically damage you to make you feel like an absolute loser. So you cannot let it get to that point. So put a number in. And every one of you, write down a number for yourself. I don't need to know it. I mean, if you want to share it, fine, whatever, that's fine. And it's great to share it to the community. But you have a number. If your number is 0, then you pretty much signed your fate. Don't be a trader. You're going to lose sometimes. And know that the tighter you make that, the smaller you make that loss, the more likely you're going to be stopped out on a regular basis, which may also increase your frustration. All right? If you said, I'm only willing to risk $10, that's it, $10 per day, and you're trading 1,000 shares of a stock, that's the spread. You're done. You'll get frustrated very, very quickly. So definitely, I think percentages help, as John says here. I think it also depends on the account. Yes, absolutely. If you're starting with, you'll be shocked. I mean, I've seen people take Forex classes that have $500 to trade, and they're like, oh yeah, I know I can make $500 a day. It's like, no, man. I don't know who told you that or where you're coming from. That should just, there's no way. You can't do that. You can easily have 6-figure swings per day in just crypto. True, but you have to have pretty big accounts. I mean, I have some pretty big swings on my crypto account, but I treat that differently, right? That's such a long-term thing, Joe. I'm not worried about it. I mean, today alone, I think was down 34,000. I'm like, I'm not worried because I know my target is somewhere between September and November of next year. John says, I can handle $500 loss in my 1% account, but not the spread account. Okay, and good. I'm glad you say that because it is important, in my opinion, to have separate accounts for different objectives. So if you got a spread account, that might give you different risk management rules. If you got a short-term day trading account, that could be different, but keep those accounts separate. So you're saying set an amount of money per day for lose? I think so, Chloe. Here's why. The topic for today was consistency, right? How to be a consistent trader. And if you're setting a number, let's say you go, well, if you use a percentage like John does, I think that's okay. 1% is going to be relatively consistent from day to day. But I think to be a consistent trader, it makes it easy when you say, I'm only going to risk X amount. Let's say it's $100 per day. Fine, whatever works for you. But stay with that for a while and consistently keep your $100 stop loss. And we'll get to some next steps here, but as we go, you're going to modify this, right? This isn't permanent. The rules I use today were not the rules I used back in 1998, right? Very different. But it all boils around risk management. I think that there's two components. Risk management and psychology are probably the two most important things in all of trading. And a lot of people say psychology is more important. I don't think so. I actually think that the risk management side of it's the most important. I believe that psychologically you can condition yourself, train yourself, and work on that. But your risk management is what causes a psychological reaction, right? When I lose 10 grand or so, psychologically now I've got to fight another battle, and I don't want to do that. So by keeping my losses small, I won't incur that psychological warfare I have to deal with. Carrie says 0.005%. Would it be better taking trading as a side hustle? No, let's not look at it as a side hustle, Andres. I see where you're going with this. I have personally found it's easier for me to have consistency if I know I have another source of income, right? People always ask me, well, why do you still teach for OTA? Why do you do these different jobs that you do? Number one is I like working. Number two is it takes me away from trading because otherwise it could be all consuming. And the third reason is because I have a steady income coming from those other sources. Therefore, I'm not reliant on my trading at all. Matter of fact, I don't touch it. I really just let it keep building and building and building over time. So I don't know if I want to call it a side hustle, but I think you should have a parallel job with it, right? I would treat this as a profession. In my mindset, you've got to go into trading as I am going to be a professional at this, which means it's a full-time gig, right? I think if you approach it as a side hustle, it's like, what happens there? It doesn't really matter. No, it matters. So yeah, I wouldn't call it a side hustle. I would call it, a second job, parallel employment. All right. Hold on, I got a whole bunch of different comments coming here. I have one. If I lose 2 trades, I stop for the day. I don't have. Okay, so Chloe, you bring up another point here, which goes into my risk management style. And Chloe says, I have one. If I lose 2 trades, I stop for the day. I don't have an amount of money. Okay, that's bad. Okay, that's bad. So I have a rule that if I have 3 losing trades in a row, I stop. If I have 3 losing days in a row, I stop. However, you still need a monetary number. You said if you lose 2 trades in a row. Well, if those trades are $100 each, you only lost $200. Okay, fine. Those trades are $5,000 each. You now lost $10,000. We're a completely different person here, right? So yes, I'm okay with having 2 losing trades and you stop, but you still need a number that you say, that's the most I'm going to lose on this trade. Not, I'll have 2 losing trades, right? 2 losing trades, but also I need a monetary value attached to that. And again, this is all just me being, I guess, a coach here and saying, here's how I would approach it. You can do whatever you want. But I think, Chloe, by saying, oh, if I just lose 2 trades, I'll stop. The door is open for catastrophic losses on those 2 trades. Because what happens is you put on a losing trade, and let me tell this story right here, and you guys tell me yes or no, has this happened to you? You put on a trade, and you mentally, you're like, okay, I'm going to lose $200. That's the most I'm going to lose on this one, right? And it does good. You're up $300, and it's hovering, and then all of a sudden starts to drift lower. It comes down to break even. You're like, oh, nah, I know it's going to go up. I'll be fine. Now it hits your stop loss, and instead of pulling that trigger and taking a $200 loss, you're like, just another 10 cents, another 10 cents. Yeah, I know it's going to go up. And then you double your position or add to the position because you think, man, this is such a great buy point. And it keeps drifting lower and lower. And by the end of the day, you were supposed to lose $200 in that trade. You now lost $1,000 on that trade. And that happened to anybody here? Yes or no? Social Security is my parallel job now. Good luck with that one. I don't trust I don't trust Social Security to be there when I'm around. So I'm willing to bet a lot of people have gone through that. Where you're like, oh, just 5 more cents, another nickel, another dime, another quarter. And next thing you know, you're like, whoa, I'm going to do seppuku here. It's just so expensive. So, Chloe, I would definitely encourage you to make sure you pick a number. And it doesn't have to be a huge number, but it has to be something that allows that security to move enough so that you give it some breathing room, if you will. But I would definitely put a number. And if you don't believe me, Chloe, look at the number. Look at all the comments here. I got yep, swing trading, yep, yes, oh yes, trading. So yeah, revenge trading, Patel. That's a good one, man. Revenge trading. Whoo, that's another rule right there. We'll dive into that one a little bit later. I don't know what you're. Denial is not a river in Egypt, Liz. Oh man, Joe, you watched it go to 0? That's pretty brutal. One of your guests on Power Trading Radio has said he only takes 1 trade a week. Wow. I don't remember who that was. I mean, but that's fine. On that note, I'm glad you mentioned that, Margaret. It's a squirrel distraction to the conversation, but it's actually very relevant. If you go back to my trading back in the late 90s, I've told you guys many times, my average in 98, 99 was like 550 trades a day. If you compare this to a military analogy, that's just someone with a machine gun just spraying bullets. Probably not that effective, and you're opening yourself up to damage. You move forward to where I am today, I have a specific number of trades I can make per day. I consider it like bullets in a gun. And when you tell yourself you can make only a certain amount of trades per day or per week, what happens is those trades become much more precious, much more valuable. I can't just willy-nilly make a trade for no reason. I got to look at it and go, okay, here's 3 trades I want to take, and I could take them all, but I really should, pick the best one that's going to give me the highest probability, the best rate of return, and go with that one. Would you rather be a frontline infantry with a machine gun, blazing into armed territories, or the guy on the watchtower where no one even knows you're there and you're just plucking off trades? I want to be the sniper in the watchtower. I think it's a much safer place to be. Oh, thanks, Future. Okay. Well, if you're new to the NQ, you've got Pepe in here. He's the NQ specialist in the room. He can probably give you some pointers as well. Mr. Davis said, not admitting that you're wrong. Yeah, that's another one. Denial, right? You're just going, no, this isn't happening to me. I always tell students, if you find yourself saying one of these 2 statements, it can't go any lower, or it just can't go any higher, that means you're on the wrong side of those trades and just get out, right? If you say, oh, it can't go any lower, that's because you're long and you're just like begging and pleading and hoping it won't go any lower, and it probably will. Yeah, John takes my analogy one step further. I want to be the guy flying the drone. I guess now you're talking AI and algorithms, right? Okay, let me go back to my talk track since I've diverged from it quite a bit. We still are on the very beginning of this, which is developing a trading plan. And first one is know what you're trading. That second one is risk management, which has many facets to it. And then for me, this is a critical one. Have trading rules. Oh man, I have so many trading rules, and it really depends on what I'm trading. There's certain times of the day that Pepe will tell you. Pepe loves his futures markets. He's the open, but it took him a while to find what works for him. My rules as a day trader early on were wrapped around where my success was. And my success was the opening 90 minutes of the markets. I don't know why it was. Probably because it's the most volatility. Middle of the day, I gave money back. And the last hour and a half, I made money. So my rules were, don't trade the middle of the day. Trade the opening hour and a half to 2 hours and trade the last hour and a half to 2 hours, right? Why? Because that's where the statistics, the data showed I was making money and I did best. Trading rules about share size and what securities you can and cannot trade. Since I consistently lost money with Apple back in 98, 99, 2000, I have a rule I can't touch it anymore. I'll never trade Apple again. It's just part of my rules. And to me, those rules are important because if you want to be consistent, we kind of have to do the same thing every time. On that vein of consistency, I wrote an article years ago. I forgot. I think it was just a blog post I did about consistency in baseball or in trading versus baseball. And the first analogy I made was about Derek Jeter, who played for the evil New York Yankees. However, he's one of the best baseball players of my generation. And over the course of his career, which I think probably like 15 years, I'm guessing, somewhere in there, he batted .315 lifetime. And you're like, well, that means he failed, 68.5% of the time. That's true. But he's going straight to the Hall of Fame because batting lifetime .350 is amazing. I think as traders, we have a much higher probability of success than, .315. Now, there was one period, and I can't remember the numbers exactly. I'm sure someone could fact check it for me. I believe he went on a 36 appearance where he didn't hit the ball. That just doesn't happen to him, right? Not hitting the ball in 36 attempts, that's crazy for him. And my argument is, do you think he was doing anything different on that 37th at bat? He did the exact same thing he's been doing, which is just his swing. He was just, for some reason, wasn't connecting. He didn't make major changes to his swing. It's just saying, all right, what's been working for you has worked for you. Just do your swing. You know how to swing right, hit the ball, and go. And he got back on track and, of course, batted .315 lifetime. For consistency's sake, these trading rules that you define for yourself, they may not be the one. I know, Lisa. I was always hating the New York Yankees because they just bought themselves a bunch of championships. But, now it's the Dodgers, so it is what it is. These trading rules must be modified over time. They need to change slightly. The key is to not make multiple changes at once. So if I've got let's say I've got these 3 rules. I'm making it up very quick. I'm going to trade 100 shares for the first 3 months. I'm not going to trade the opening 15 minutes. And I will not trade any of the FANG stocks, right? Whatever those 3 rules are, and I give myself a time limit. Don't just change those all of a sudden one day. Say, okay, now I can trade the opening 15. I can trade as many shares as I want, and I can trade any stock. By modifying those 3, I've now created 3 different new variables. 3, what do you call those? Not vector points, but it's points of change, which I now have to try to figure out where the change came from. As we evolve as traders, modify things, tweak things a little bit, but don't do major changes all at once. Don't revamp 5 or 6 different things that you do. Change one thing and try it for a couple of weeks and see if you notice a difference in your results, your psychology, your execution, whatever it is that you're changing. Those rules are critical to keeping you on that right path. Next, strategy. As Mr. David says, find a style that works for you. Yeah, I would put style and strategy kind of in that same boat. Was Adam here? Did Adam make it? Oh, there he is. When you look at strategy, there's a ton of them. I'm a firm believer that price moves because of supply and demand. I'm an OG supply and demand trader long before who says he created it. Just ridiculous that that pathetic clown says he created supply and demand methodology. What an arrogant, pompous jerk that guy is. Oh, I created air. I created the idea of air. No, you didn't. It's been around forever. Supply and demand has been driving prices long before I was even born. So I think that that's what drives the prices in the markets. Of course, I do think a great deal of that comes from manipulation and understanding how the big institutions play. So my main focus is going to be supply and demand, but other people are using indicator combinations. Other people are using star patterns and things like that. Whatever the case may be, I don't really care what the strategy is. It doesn't make a difference. It's the rules that you wrap around that strategy that will help you refine it, make it better, and become more consistent. Also, I think what Mr. David was talking about, finding a style that works for you, this is also very critical. So some of you may believe that you want to be a day trader. I'm telling you right now, it's the hardest one. Well, it's funny, a couple of CPAs that I know that obviously they can't tell me anything, but they say that their clients who are short-term day traders typically are losing money. Now, I'll never know because I'll never get to see the back end of a brokerage account to see exactly what everybody's doing. Only you know exactly what you are doing. Day trading is the hardest one because it's just, you're so sensitive to price fluctuations in the short term. And yes, commissions are free for stocks right now. Futures, you got a better shot at it. But day trading is the hardest. I found swing trading is really, maybe it's just because I'm older now, I find swing trading to be kind of my favorite, which is trades that last a couple days to a couple weeks. 30 days is kind of the longest, and that's really in my 1% account where I sell puts for 30 days or calls against my positions I have. But strategy is important. I would experiment with different things, but remember this. When you go out there and you're looking, just researching different strategies, everybody and their mother is selling a strategy. Everybody. I mean, heck, OTA is selling their strategy. You know who, which Margaret nailed on there, is selling his strategy. Of course, the legal documents show his strategy. Well, at least he doesn't make money as a trader. It says it specifically in the lawsuit, the subpoenaed his trading records. But everybody's going to try to sell you their red light, green light system. I saw one today as I was looking for some videos. It was a trading indicator. It says, if it's above the white line, you go long. If it's below the blue line, you go short. It's so easy to do. Everybody is trying to sell you something. So they're always going to give you this impression that whatever you're buying from them is the greatest strategy ever, and you were a fool that it took you this long to find that service and use it. Okay, so just remember that it's all a sales pitch in the trading world. Find out what you think works for you, and watch your pocketbook in the process. I don't think you need to be selling out a ton of money for this stuff. One sec, Adam. I'll get to some of your comments in here. This show was driven by you, by the way. I don't know if you might have joined us late, but this is because of you. I even have your question from chat in here. There you go. There from Adam D. Okay, let me go into the last part. And I just like to have goals. And I'll be honest, I have deviated from my goals. I have not followed my goals in a long time. I had a major issue happen a few years back where all of a sudden I started having just unbelievable, uncontrollable anxiety out of nowhere. For me, goals are non-monetary. I think everyone here would agree that our time on this little spinning marble in space, moving 1,000 miles an hour, is very limited. And we can hate, we can, be aggressive, we can want all these things. You can't take a bunch of money with you. So what are those goals? What are the things that you want to achieve that you can take with you? And to me, that's just memories and experiences. So in my trading plan, I had a place, in my original trading plan, it was I need to go to some place I've never been to for 2 weeks every year. Well, as I get older, that becomes a bit more of a challenge to do 2 weeks. I was doing pretty good till my claustrophobia anxiety just came out of nowhere a few years back. But I'm actually getting back to that. I want to travel, see new things. I'm going to I'll be going to Alaska here in June. Just living life and doing as much as you can while you're here. And hopefully that when I do die, my accounts will be at zero. That's my goal. My account will be literally the last penny. I'm like, oh, I'm done. I'm in a penny. But yeah, set goals. And for some of you, it might be that you want to give to charity or give back to your church or support your community or, give college tuition funds to kids that need it. Whatever that case may be, things that make you happy and make you feel good. And if you are one of those people that drive me nuts, that's like, I have to have a new Bentley or Ferrari or Corvette, fine. But there's much better things to spend your money on than that stuff. So I would set some goals, at least to allow you to strive for them. My main goal with all my accounts, all of them, is to beat the S&P 500. That's it. And I think that's a very humble goal. You may think it's that easy, but over time it can be. It may not be. Beating the S&P, there's times you're like, how is this that hard? How am I not beating the S&P? And if you find that your goal is just to beat the S&P or meet the S&P, then just buy SPY and call it a day. I hope so. I hope I love Alaska. I'll be in your neck of the woods, John. I'm going to be in Seattle. I'm flying into old Seattle there. All right, I got a couple more things here. What time is it? I didn't think this was going to be that long of a show, but I was mistaken. So we've got develop a trading plan, right? That's the first piece, and I gave you a bunch of subsets to it. Continuing on here, and again, the whole goal is for Adam to kind of have a little bit better idea of what steps need to be taken to develop consistency, and how to kind of maybe tell your parents. And I don't know if you saw the beginning of this, Adam, but I was like, you need to tell your parents either to stop talking to you about trading or be supportive. And if they're not going to be supportive, then don't talk to them about it. Find a community of like-minded people. I know you're an OTA graduate. Go into some of those XLT rooms or community rooms and be around people that are aspiring to do what you do. To me, there was an old phrase. I'm not a phrase, but I don't know if my friend created this, but I knew a guy who did did presentations for OTA, and he would start the room off, and he would ask people, who do bums hang out with? Everyone's like, bums. Okay. Who do doctors hang out with? Doctors. Who do scientists hang out with? Scientists. Who do traders hang out with? You should hang out with traders. Right? Hang out with people who are trying to do the right thing or to do the same thing as you are. Now, not all of them are going to be successful. We know that darn well. But you got to tell your parents to be supportive of this, and obviously your results are going to be what ultimately turns them. But it takes time to get to that level of consistency. So I thought this was going to come in one by one. I have practice, discipline, and patience. This kind of should go with the risk management side of things, but I think it's really important to understand you cannot force trades. It seems that 9 trades out of 10 that I pull the trigger just because I got to be in, I want to do it right now, those ones end up failing. Yet the ones I just wait for it, and all of a sudden, boom, it falls right in your lap. You're like, wow, that was easy. And it turned out to be a great trade. So patience is a big one. Another piece on there that I had was master trading psychology. You really have to understand your brain, how you think, how you work, your pain points. And that's very difficult. There is a test you can take. It's called the Big Five test. I think Big Five psychology test. And that'll tell you what are some of your strengths and weaknesses. But yeah, that one, there are people like Dr. Woody Johnson, Adrian Togare. These are trader psychologists that will help you understand, how your brain is reacting. What are the trigger points for you that are causing X, Y, and Z? And it took me a long time to master that. It really was more of an introspective psychological experiment because there's many situations in my life where these psychological problems would persist. And I realized that as soon as I went into becoming a trader, they were there as well. I have a stubbornness about me. It's nowhere near what it used to be. Man, I had to fix that one. But I realized early on that I'm pretty damn stubborn, and I think that I'm right all the time. Well, as a trader, you know that's going to get me in a lot of trouble. I can't think that, right? I have to just say, here's what I think's going to happen, but the market's the one that's always right. And if it doesn't work out, fine, move on. That was a big change for me. Many of you are going to have to make those changes and work, literally get a journal out and just have a whole psychology section. How do I feel about this? How do I deal with this? How can I make myself better and more impenetrable when this market throws the chaos right in my face? And then the last one, journaling. Early days, I think journaling is incredibly important. I don't journal anymore. It's been a long time since I journaled, but I think it will really help you understand what you're doing right, what you're doing wrong, and get your thoughts down on paper and help that consistency process. And my final point there, it just says constant review and analysis. This is not okay, I took a class on trading and now I'm just going to trade and make money. No, man, every business owner has a review. Well, any successful business owner goes back and looks at what's selling, why is it selling, the demographics, the time of day, different color palettes, right? You need to know all those little details because it allows you to go at the next wave of attack armed with more probability of success. In a business sense, let's say I'm running an apparel store and I've got 5 different colored shirts, but the blue one always sells out. Well, I'm ordering more blue ones, but the black one doesn't sell at all. Why would I order any more of those, right? Those are just simple details where I think someone who doesn't pay attention to that is going to order the same amount of all 5 shirts. What I don't understand is how, and this is, I'm an average size guy. I'm nothing special about my about my size. I 5'8", 165 pounds. I'm a medium, maybe a little bit of large now, getting a little rounder around the edges. However, it seems like every time I go to buy a pair of shoes or a shirt, the mediums are always sold out, but there's 15 quadruple extra larges. Well, stop buying so many extra larges. They're always on the sale rack. Buy more mediums, the bell curve, right? We're in the middle. Anyway, I'm rambling. Always review. And I did a program with Tilly Allison a few years back on Power Trading Radio. She's just fantastic. And she's like, I do a quarterly review from a strategic investor, right? Looking at the longer term picture. She'll do a quarterly review of all of her accounts and just see what needs to be rebalanced. And it's just part of her routine. Kind of like when for your vehicles, you get your oil change every 3,000 to 5,000 miles, depending what your mechanic says and what oil you're using. Let's say it's 3,000 miles. Well, you all know when that should happen. You take it in right around that time. Doesn't be exactly, but if you put your date on your calendar to get your trade plan reviewed, that'll help you figure out what needs to be changed, what needs to be augmented. And it's really that study of what you're doing right and what you're doing wrong. And to me, those are the steps to consistency. That's what I have practiced, and I'm not consistent all the time. I have my periods where I go on little losing streaks, and there's other times where I go on phenomenal winning streaks. It's just the nature of the beast. But the key is over time to have that trajectory of your accounts that is going up, and that your winning trades are better than your losing trades. So to me, I think she's good. I think Tilly's doing, I think she's a financial advisor, maybe a planner or advisor. I'm going to reach out to her in the next couple of days. But yeah, I think she's doing pretty good. She's married and got a new child now, so pretty happy about that. Let's see. So let me see, since Adam brought it in here. He says, I take between 2 and 7 trades a day, risking $200 per trade. My stopping point is when I'm down 750. Do you think this is reasonable? I think it might be reasonable. It depends on what your overall account size is. I made that point earlier that if you lose 750, do you walk away upset? Do you walk away going, damn it? Oh. If that 750 makes you do that, then it's too much. You say 2 to 7 trades, that's fine. $250 per trade loss, that's fine as well. Depends on the asset. You're trading NQ. That's not that much of a movement, right? That could happen fairly quickly here. What was I going to do here? I don't have it. I had a hot sheet over here. Yeah, I think that's fine. I would definitely look at the ATR, what it is that you're trading, and what's the price per point, because that might be a little bit too tight for some of those futures. Maybe you go to the micros, and that makes it a little bit easier. But if you're trading micros, I think 250 is too much for a micro contract. You need to stack a few of the micros as well. Do you find the 2-7 really, really high quality trades each day? Yeah, that's a good question, Dave. I'm not in the markets all day long. If I am, I'll usually do the mornings. I like to, if I find something good in the morning because of a setup I had the previous day, I'll look for those. But yeah, I think 2 to 7 might be a lot, especially if you're looking at one instrument. I don't know how many instruments you're trading. Comfortable trading, 1 minute. Okay, so there's your problem right there. Stop trading the 1 minute time frame. Yeah, move away from the 1 minute time frame. You're going to make way too many trades. Do your setups off a 5 minute. So make that simple change, Adam. Go from a 1 minute time frame to a 5. And I can just tell you that from personal experience, when I was making 550 trades a day, I was on a tick chart. And then I moved to a 1 minute time frame. Like, whoa, yeah. You're making a ton of trades there, but every little sensitive juke in that market jigs you out. When you go to the 5 minute, it's a little bit more calm, right? Your swings are going to be, your moves are going to be a little bit bigger, but it's a lot less trading, a lot less stressful. I would say stop trading that 1 minute time frame and move to a 5 minute. If anything, what you want to do is trade bigger time frames and start slowly. And then once you feel more confident with that, then you break it down to, let's say, the 15 and the 5 and then maybe the 1 if you really want to get in there and be day trading those tiny, tiny little micro moves. But the big money is not going to happen on a 1 minute time frame. You very rarely will you have a huge winning trade because the charts in a 1 minute time frame look like this. They're jigging all over. It's like an EKG. But if I can smooth those out with a 5 minute chart, I may not get stopped out as much. So yeah, to me, probably the biggest piece I can tell you right now to help in your consistency, at least because I know it helped me dramatically, was going from a 1 minute, move up to a 5 minute. And if you really want to be more patient, go back to the 15, go up a couple levels and make a lot fewer trades. Your stop losses will probably have to be bigger because the ATR for those windows of time is going to be bigger as well. What would I suggest for trading options? Well, that's a much bigger one. You're dealing with a lot more variables with options. You know, are you a debit or are you a credit guy? Most people are going to be, you know, buying options directionally. I don't have the same rules in place for trading options. They're very, I would say, much more difficult to calculate that type of stuff out. If you're going directionally, you know exactly what you're risking. When you're selling, you have a little bit more risk on it because you maybe put those shares or have shares taken away from you, and that could cost you. So it's a little bit different when you're looking at options. RG says, I trade a 5-minute with a 15-minute target. Yep. I think you're better off there, RG. I think you're definitely better off there with the bigger time frames. I mean, everybody wants to be a day trader. There's people that glorify it. I watched some Trader Challenge a couple weeks ago. It cracked me up. You know, these guys are banging it out on a 1-minute time frame. And one guy, he's trading, is he 50 contracts? He had like 50 S&P contracts. And at the end of the day, he's like, I'm up $1,000. It's like, you're trading 50 S&P E-minis? 50? And you're bragging about 1,000? The risk exposure to this guy is off the charts insane. I would never trade 50 to try to make $1,000. I'm in 50 contracts. I'm talking, my goal is like $30,000, $40,000. There's no way I'm trading that. That's crazy. I would say make sure you understand the geeks when trading options. Yes. Yeah. Which, you know, makes it one of the more challenging ones. I think personally options is probably the best asset class out there. I think it's the most versatile. It gives you the most flexibility. It's also the toughest to learn. It's like going through a Germanic language where you have basic sentence structure and it's okay, these all work the same. Futures and stocks, they're all fairly similar. Forex as well. But then you jump to options, and it's like you're now learning Mandarin, which is a completely different ball game with regards to sentence structures, how it works, and everything. So let's see what we got. The best change I made was to move to the 4 to 8 hour chart and use the US dollar as my odds. That's an interesting one. 4 to 8 hours, you're talking a much bigger time frame, right? So Dave is just by saying that, you can tell that Dave is a relaxed trader. He's not taking huge short-term chances here. And also by using that US dollar. So depending on which asset classes you're trading, typically you have, there's usually a clear-cut relationship between the US dollar and a variety of different futures products, but sometimes it does disconnect. Good. Adam, my favorite setup is trading reversal out of the 15-minute zone on the 5-minute or 1-minute chart. Maximizing reward to risk ratio is my goal. Todd Davis mentioned aiming small because you get stopped more, but maximize. Yes, I would agree with that statement from Todd as well. And the other thing that I would kind of steer you towards, Adam, is if you can, instead of trading, let's say the E-minis, you go to the micros and trade. I don't know how big the account size is, but you could trade multiple micros, and that way you can set it up where it meets your target one, sell out of half your position, and now let that second half run with a trailing stop. And you'd be surprised. It's actually a great learning lesson because you'll be in those sometimes, and all of a sudden that second half made 5-10 times as much as the initial position did because you just let it run. So you start to learn a lot more about, okay, let me give these guys room to breathe, room to run, because if I get what the trader's dream is, and for all of you know, the trader's dream is finding yourself in a bullish market or bearish market and being on the right side of that trade and just riding it where every single day continues to drift in that direction. Let's say you find a long trade and you buy it, and it just keeps going and going and going, like the NASDAQ for the past couple of months, right? It's just, is there anything negative about it? Just stick in that thing. Whereas if you set your targets, let's give you an example on that NQ here. I'm going to bring that bad boy up. Here's the NQ. Let's say I'm going to go play the hard red edge. Let's say you saw this thing drifting lower, right? You get this really nice downtrend that started back in July of last year. Lower lows, lower highs, right? The odds are better. It's going to continue on lower, right? So you're like, well, I'll buy if it breaks a more recent high. Well, right there you're in. It's really a bad example because that tail. But once you get in there, it's like, okay, well, where's my target? If you're a short-term trader, yeah, you might just be into this tail right here. Well, that's not much. Whereas you really should be looking at some bigger levels here or even higher than that. And if you did use this as your target here, let's say 15,433 and your entry was at 14,948. Well, look what happened. Yeah, you met your target a couple days later, but then what happened? If you just let that damn thing run, keeps on, much more potential. So I think that that's part of the fun of having multiple lots on, is you're not forced to sell everything once it reaches a specific target. I don't know. There's all kinds of different platforms out there. I think Schwab's platform from Thinkorswim, now that they bought Ameritrade, was the best for options. There are platforms like NinjaTrader, which are fine. You have MetaTrader, which are okay. It really depends what asset class you want to trade and how active you want to be. You could do fine using a Charles Schwab, an E-Trade, or Ameritrade. It's about knowing the vehicles and making sure that you are paying the right prices, using the right order types, limits, and markets, and things like that. So, yeah, I don't really have a favorite trading application. I think they all perform some good service to you. Some are more tailored towards specific trading styles. Let's see, what do we got? Mandarin is easy. No way. I think what Mandarin, like just the two letters H-A, I think in Mandarin has 7 different meanings, and in Cantonese it's 13. For 2 letters? Man, crazy. I actually really like some of the functionality of Click. I think some of the functionality in Click is revolutionary. It just never made it to the finish line. It's just like, come on, let's get it over the finish line. There's some really cool tools in Click. A little bit bummed about that. Let's see. Adam says, I like to set one target closing half of my position and the closest opposing zone, and let the other half just run until the end of the day. Okay, so you're like making sure that you're out by the end of the day. That's also fine. I mean, no one taking things home overnight would run into that risk management perspective. At least with futures, you have the ability to get out during the after-hour session. I remember good old Bob Dunn used the daily only. He was quite the guy to hear. Miss him. Must have been something else to, not just old blocker, not just to interview him, to hang out with him. Bob and I were pretty good friends. And just hearing his stories, his experiences, and he's a quirky, crazy, zany guy. Was a quirky, crazy, zany guy. Just a lot of fun to hang out with and share stories. So it was pretty cool. Interactive Brokers account with TradingView. Yeah, honestly, I do most with TradingView. I do most. With most of my analysis, literally, I do with TradingView. I think I may look and see which account I could connect to this, because I may see about executing from here. But I just like the simplicity of their platform. It doesn't do a lot of things that I like. Like TradeStation has some really good filters that you can do. The radar screener on TradeStation is awesome. But yeah, this is a pretty decent platform. It works. Merlin, Chinese toddlers speak Mandarin easy. Yeah, I know. Well, when you're in the culture, it's easy. It's funny because I actually studied it for a little bit here, and I just gave up. I gave it. I really, for me, I found that the way that I would learn a language the best is if I'm immersed in that culture. So unless I'm living in China, it's going to be hard for me to pick it up. You need to speak it every day. My Italian was picked up very quickly because I was speaking it every single day with full immersion. So maybe I should go to China for a year and pick it up. Bob like getting in front of frozen pieces of rubber, moving at 100. Yeah, his goalie. Yeah. God, I miss that guy. All right, let me real quickly, since I realize we're going to do an hour show here as usual. Well, you're not going to get me for a couple of days, so I'm just going to load it on today. Here's what we have for today. Bitcoin giving back all the yesterday's gains. Kind of surprised to see that. I thought we would drift higher today. I thought we'd see it kind of move towards that all-time high, but gave it all back today. Interesting. Very okay. Crude oil also selling off today. I was surprised to see that one as well. We are kind of back within that initial breakout range between 84.85 and 86.20, is down 1.39% on the day. But still overall in a phenomenal uptrend. So even though it looks like a pain day, the grand picture is still fine. 10-year was down pretty good today, although you can see the new candle forming shows it down 0.09%. It was actually down much more than that. And that was after we had that shooting star formation. We talked about that yesterday. We dropped 1.27% on that 10-year yield. Thought we'd get back into this yellow box. We're real close. Did we tiptoe into the yellow box? The low of this was 4.354. The box goes to 4.354. It literally came directly to the top of that demand zone at this point and popped out. Wow, interesting. Nice move. Dollar index unchanged, little spinning top formation as well. So not really much to speak of there. Your S&P was drifting slightly higher, but it had a pretty volatile range. Good to see you, John. Have a great day. Had a pretty volatile range, especially compared to what the boredom of Monday's trading session. That was awful. We are still technically outside that lower trend line. It was up 0.13% today. NASDAQ pushing up 0.35%. Similar picture. Butting heads right against that 18,375 mark, which we've kind of mapped out here as the retest level when I talked about my stages for a reversal. Russell up 0.38%. Fine, 3 days in a row of moves to the upside. And then the one that's really just torturing me right now, like literally torturing me, gold and silver. Gold up another 0.48%, but take a peek at SLV. I mean, come on, man. It's just like, I feel like the market makers, hey, what did Merlin do with this silver? Oh, he wrote calls against it at 23.50. Okay, launch this bad boy. Rip it. Just on those 8,000 shares that I have long right now, that would have been an extra, an extra, let's see, 8,000 times $2.20. Yeah, over $16,000. Damn. Shoulda, coulda, woulda, right? Shoulda, coulda, woulda. Oil needs to go back. Green, my CTRA call demand. Yeah, well, sadly, Mr. David, markets don't exactly do what we want them to do. Earnings-wise, there's nothing on the earnings calendar for tomorrow. The real stuff starts on Thursday, and then the big heavy hitters happen on Friday. So we'll keep an eye on that one for you guys. I probably won't be here, so you have to just do without me. But here is what we've got cooking for tomorrow. You actually have some really important stuff. They are expecting a decrease in the month-over-month CPI numbers for the U.S. Yet the year-over-year is expected to go up to 3.4%. So that is not a good sign. That's going to bring us back up to this a little higher than what we saw back in January. We're at 3.5 in January. 3.4 in January. So we're going to come right back up to the highs for the year on inflation year-over-year. Now, this doesn't necessarily mean the end of the world for the markets, but it is showing you that we've stabilized here and now all of a sudden starting to slowly tick back up. So we'll see if that is any higher than this. If we come out higher than that 3.4% year over year, or these numbers here tick up higher than expected, I would expect to see the CME Fed Funds futures surge yet again. Let's see, what else I got? What have you seen with the different professional? What have you seen with the different professions? Oh, you mean like which ones succeed more than others? I think it's typically professions that have very structured rules. Like engineers, I think, do rather well because it's they know that they can't deviate from this or the whole thing collapses. So engineers, I think, are pretty good with it. I think accountants tend to be pretty good because it's a numbers game. Those are the two I've seen in the past. And doesn't mean that there's guaranteed success, but it seems like some of the engineers that I know get better and better. I know, Mike. I got to end up. Guys, I'm going to wrap up here. I'm not going to do an hour show. I can't let you win. If you got comments, questions, feedback, email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos. I may do a show one day in the next 3, but you'll have to stay tuned to my Twitter feed. I'll let you know if I'm going to do a show. I'll just say, hey, doing a show today, and I'll let you know earlier on that day. That said, thanks, guys, for joining me. Sorry I won't be here the next couple days, but got to work. Got to pay the bills. Hope you guys enjoyed today. And for those that were struggling with consistency, Adam, hope this helped you out. Thank you for the question. I'll see you guys next time. Take care.